What is going on, fam? All right, so I created a video earlier this month in regards to interest rates, and I didn't post it because I wanted to do it in a different format, and I wanted to make it probably more legible for you guys so you can see it on the wall, as opposed to the first video. I was sitting on the couch and holding it and trying to write at the same time, and so I went ahead and put it on the wall. Boom. So hopefully it comes out a lot better. We'll see. Time will tell. All right, so again, wanted to create a video about interest rates. So what got me involved in my interest rates and wanting to understand interest rates was student loans. But this information can be applied towards your student loans, towards your car payment, your car loan, your mortgage, your credit cards, any personal or payday loans you may have. All of these, they all have interest rates, okay? So interest rates works in the same fashion. Before I get started, I need you guys to do me a favor. More than likely, I will post this on Facebook because that's the social media platform that I use the most. But it's going to be a link to YouTube. If you click the video, I need you guys to do me a favor. If you have any comments, leave them on YouTube. If you like the video, please share it and also subscribe to the channel. Typically, I do car videos or car content, and I'm trying to get, and I want to share this knowledge with you guys because this is something that everyone can relate to, okay? It can be kids, adults. So for those who may be going to college, going to school, for those in school, and for adults who are, paying back student loans or paying a mortgage or paying a car loan, it is all informative. Now, I know people who don't take out loans because essentially, what a loan is and what interest rates are, or what interest is essentially someone is saying, hey, I'll give you this money, but you need to pay me back with interest. So not only are you going to pay me my money back, I want you to pay me additional money. And for that lender, it comes off as an incentive. Like, yes, I would give you money as long as you are willing to give me that money back with a 5% interest rate. At a 5% interest rate, okay? So that way they're getting money back plus some. And their money is working for their money, okay? They don't need to put in any work to make that extra money. They allow their money to work for itself. That's the goal, okay? So again, pretty much you're allowing someone to, or you're giving someone more money than what you initially borrowed in order to, buy something or pay for something, okay? Car, house, education. All right. Now, as a borrower, you need to make sure that you understand how interest rates work. Okay. So interest rates are calculated on an annual basis. Okay. But it accrues on a daily basis. So that's what we're going to go over today. I want to show you guys. And of course, for those who know me, know that I'm very, very specific, and I don't mind sharing my own personal information because I want the information to be beneficial for you, and that way you can maybe avoid some of the mistakes that I feel I made. Okay. All right. So as I said earlier, when I went to school in 2005, I took out a loan that was $20,000. And by the time I graduated from my master's program in 2010, it was $36,000. Okay. $36,000. Now, that $36,000, I pay maybe $300 and something a month. And about 6 or 7 years later, I still owed $32,000. It wasn't adding up for me. What caught my attention was that I was filing taxes. And every year when I filed taxes, you can claim your student loan interest as a deduction. Okay. Well, I was able to claim over $4,000 of interest on this loan. And my payment was about $360 a month. So in my mind, I was thinking, man, that's like almost all of my payment, right? That's almost everything that I'm paying is the interest. So that's what made me break it down. Okay. So I'm going to go into detail and share this information with you guys. Okay. So my first loan, and I'm going to just discuss my last loan that I paid off because the other ones didn't have a huge interest rate. Okay. So now when it comes to loans, typically you have a variable and a fixed rate. And more than likely, the variable rate has a lower interest rate up front than the fixed rate. And it's almost like an incentive to say, hey, take this loan out with the variable rate because it's cheaper. It's a lower rate. But over time, that rate can increase. And it can also decrease, but I've seen it increase more often than it decreasing. Okay? Now, the Federal Reserve sets those interest rates, or they set like a, it can increase at a certain percentage. And so what I was seeing was that it was increasing 0.25%, almost like, every year or a couple times a year. Okay? So my loan, when I started paying attention to it in 2018, was $32,000. Okay? So $32,000. And at that time, the interest rate was 12%. All right, so we got $32,000 times 12. $32,000 times 12% is going to be $3,840. Okay, $3,840. All right. Now, I wanted to understand what I was paying on a monthly basis. So you take that $3,840 and divide it by 12. There's 12 months in a year. Okay. Divided by 12, and that equals $320. All right, so I said that I was paying $360 a month. This shows that $320 of it was going towards interest. Do you know how long it would take you or me to pay off a $32,000 loan when you're essentially only paying $40 a month? A long time. Okay, we can do the math on it. So 32,000 divided by 40 is 800. Okay, 800 divided by 12 is 66. Okay, so pretty much it's created so that I would probably never pay that off. Mind you, the interest rates were variable, or the loan was variable, so the interest rate could continue to increase. Okay, so then I refinanced my loan, and once I refinanced the loan, the interest rate went down to 4.97%. Okay, so 32,000 times 4.97% is $1,590. Okay, now it's 1590.4, but I'm going to drop the cents in this example, and that way we can, make it easier. Okay. So to understand what it was for a monthly basis, or what the interest is on a monthly basis, I'm going to do 1590 divided by 12. And that is going to be 132. And we'll do 50. We'll keep the cents on that time, okay? So this just shows what the difference is, okay? Same loan, different interest rates, pretty much cut in half essentially. For the $32,000 loan with a 12% interest rate, it's $3,840, and with the 4.97 interest rate, it's $1,590. Okay, so essentially, I was saving myself by refinancing $2,300 a month. Okay, almost $2,300, not exact, but almost. Okay, this here is almost $200 a month. You can't tell me that that money can't be used towards something else. With that extra money, I can apply more money towards the loan. That's gas money. That's bill money. That's food. So yes, that money can be very, very beneficial. Okay, to keep. You know what I'm saying? So for example, we just got the stimulus check that was $1,200, and some people were able to do great things with it. All right. So for me, I wanted to go even deeper. Okay. So we got 320 is how much I would pay on a monthly basis. Let's divide that by, now I'm going to divide it by 30 to represent the days in a month on average. So there are some, one month with 28 days, 29 this year. There are some months with 30 and some months with 31 days. So we're going to go 30 on average. Okay, 320 divided by 30 is 1066. Yeah. Okay. Now let's divide our 4.97% interest rate to see what that would be on a daily basis. 132.5 divided by 30 is 4.1. Okay. I hope that's big enough for you guys. Okay. So I'm saving myself $6 a day in interest. Okay. I eat out a lot. That $10, that is going to be a meal for sure. I can get me some food for $10. $4.41. I mean, I can go to Wendy's and get a 4 for $4. But I mean, that's not like a meal. You know what I'm saying? It's a good snack, but it's not a meal. Now, again, $6 a day times 30, that's going to be your big difference. And that's where you can see your difference at. Okay. So then I started paying this loan down. And I just want to show you how beneficial it is. So let's say that this loan, when I got down to $15,000, for example. So I got down to $15,000 at 4.97% interest. Okay. Now that's $745. Okay. So $15,000 loan, 4.97% interest. That's $745.50 a year. I don't think that's bad, but it's still money that is essentially wasted. Depends on what you're using it for. Property typically increases in value. We'll see what the housing market does. Nothing's a guarantee. Okay. If you were to take out a mortgage is what I'm getting at. All right. So let's divide that by 12 in order to understand how much we would pay a month. So that divided by 12 is $62.12 a month is what you're paying in interest on a monthly basis. Okay. And if you want to do the 62.12 divided by 30, that is going to be 207. Okay. $2.07. So you guys can see the difference of what it makes. Okay. So now I continue to, I did this the whole time. Now I will say that as your loan decreases, and this is a perfect example, as your loan decreases, you will start to see that you're paying less and less towards interest. Even the next month you'll see it. So if you were paying $1,000, it will go from $32,000 times 4.97%. Then it would be $31,000, minus the interest. You have to consider the interest. But at $31,000 the next month, depending on how much you pay, you will see a difference. And it may be, it'd be a little less than that. Okay. So 31,000 times 4.97% is $1,540. So right now you're already saving, $40 a year, or $50 a year, excuse me. You divide that by 12, you're at $128.39 is what you're saving a month. Or what you're spending a month, but you're saving, what, $4 a month. Okay? And you can break it down even more. Now, I broke mine down, as I say, even further. I'm running out of space here. But as an example, when it got down to 1,500, I still did the same thing. So 1,500 times 4.97%. And essentially it's the same thing as right here. You just drop in a zero for those people who are smarter than what I am. Okay, so that's 74.55. Remember, that's a year. You divide that by 12. Okay. So once you divide that by 12, and you should get 621. Okay. All right. So you're paying $74.55 a year. Divide that by the months in the year. It comes down to $621 a month. You divide that by 30, and you are paying 0.20, 20 cents. Okay. I'm just going to double check my math here, which should be correct. Okay. Now, and it's 0.207, if you round up, it's 0.21. I made sure that when I refinance my loans, that I check this information myself, right? So I was wasting $10 a day towards in interest. When I refinanced my loan, they told me that it was going to take effect immediately. So I made sure that I wrote down on a specific day how much my loan was, and then I checked it again a day or two later, and instead of it being up by $4.41, it was still going up by $10.66 per day. And so I called them and I said, hey, what's going on? You know, my interest rates are still showing as the 12%, but I refinanced, and they said, oh, there's processing time. And so it went from being to, hey, it'll happen right away, till, oh, well, we have to get it processed. But I was able to catch that. Even down to when I owed $1,500, and mine was, you know, it was about $1,550. So it was about 21 cents in interest per day being accrued. I wrote it down. And then I checked it 2 days later, and it was 42 cents more. Okay. I checked it another day later, it was 21 cents more. So this information was beneficial for me, and I hope that you guys find it beneficial as well. Again, you can apply it towards any age group. If you have a mortgage, if you have a car payment, credit cards, it doesn't matter. Okay. As long as interest can be accrued on a daily basis. Now, if you have a credit card and you use your credit card monthly, and you pay it off at the end of the month as well, that interest isn't gonna have time to hit typically. Okay, so you're fine. But for those loans that you have out there, again, knowledge is power. I hope you guys found this information to be beneficial. Please, again, share the video. Please subscribe to the channel, and also leave comments on YouTube. If you guys would like to see me talk about any information, if I have any knowledge about it, I will be more than happy to share that information. And even if I need to research it, I will be willing to do so. Okay. I typically post car content, but I think this is very, very informative. And of course, I want to see all of you do well, and so we can all start building towards our next goal. All right. You guys take care.